Everybody, ladies and gentlemen, hello and welcome to us here at Nadex. My name is Philip and I will be once again your presenter for today's webinar. Today it's about short-term Forex trading with spreads. We want to analyze the markets together. Last week we learned about spreads and what those are and what we have to pay attention to when we want to pick a certain type of spread contract for our trading. We want to put that into action today and see what the market gives us and how I arrive at my trading decisions when I'm looking at a certain market segment, just for example, like today when we're looking at Forex trades. Yeah, pretty much agenda as always. You guys know the drill. If you can hear me well, if you can see those slides changing, and let me change those slides here, then I would appreciate a very short yes or why in that small questions box. And please, if there are any questions through the course of this webinar, I'll do my very best to answer those questions. You're not interrupting my flow. I really like to interact with you guys, and I feel we're here to learn something together, and asking questions is really a vital part of the learning experience. And for that reason, please don't be shy, ask your questions, and I'll do my very best to help you with your questions. Today's session is scheduled to run for around about half an hour. I won't be watching the watch closely, so however long it will take, but we're shooting for around about half an hour. And before we get started, there are, of course, our usual risk disclaimers that you guys can already see here on the screen. So please take a moment of your time to read through them carefully and make sure that you're okay with them. And thank you very much for the feedback on the visual and audio check. Essentially, this risk disclaimer says that trading, of course, involves risk, and you should understand those risks and the instruments before you're getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, so please make sure you're okay with this before continuing with the webinar. And we have also the Nadex risk warning. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only, and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes including Forex, stock index futures, commodity futures, cryptocurrencies, and economic events. Trading can be volatile and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's just get started. Today's agenda, a brief introduction to trading spreads. I think this is really primarily a short recap of what we already learned yesterday. Last week, when we had a deeper look and to get a better understanding about what spreads actually are. Major part for today, we want to look at the markets together. First, a quick scan through all the Forex markets available for trading here at Nadex. Which of those markets do I like or like better than the others? And then we want to have a closer look at those markets, try to match them with the spread contracts currently available for trading, and then trying to build a case for a potential trading opportunity. Once again, the important thing today is about the thought process. It's not about the trade that I might be putting on or not. To get this perfectly right, to get the perfect setup just within that short time window of this webinar is really something. I don't want to call it impossible, but really it's very stretching very far. And this is why my main focus here is always on trying to teach those ideas, those concepts, making you guys able to see what I'm seeing on those charts. So from start to finish, scan to potential trading opportunity, we try to cover everything here today. So let's have a look and do a brief recap, a brief introduction to trading spreads. What are spreads? Spreads are a simple derivative built with built-in floor and ceiling levels, two price levels. You will see those all the time when we're looking at the contracts and contract specifications here. Those levels define the lowest and the highest points at which it can settle. So price can float within that range of the floor and ceiling levels. If price is trading above this level, doesn't matter, the spread stops, or the value of the spread stops going higher than the ceiling level. Same thing is true if price is falling, price of that spread actually can't fall below that ceiling level. So you, just like with trading binaries, you always know your maximum potential loss and your maximum profit from the outset, which makes it so very, very easy to apply proper risk management. People always think when they're just getting started with trading that it's all about getting the right signals and it's all about the entries. No, it isn't. The most crucial thing is risk management. You must make sure that no matter what happens today, you will still be around tomorrow, which means you can still trade again tomorrow. There's always a learning curve involved, and risk management makes sure that you stay in that game, that you can still learn and progress and take it from there. Risk management absolutely is crucial. Very difficult, or not difficult, but very cumbersome to implement with traditional trading instruments. But here at Nadex, you definitely know your risk upfront, and this makes it very, very easy to apply proper risk management. I'll show you that also in a moment. Spreads, just like any other derivative, is always based on an underlying market. In our case, it could be a commodity, cryptocurrencies. You heard those asset classes before, those market classes before. Today, we want to focus on Forex. The benefits of trading spreads here at Nadex is definitely those are suitable for the retail trader looking for leverage and hedging opportunities. You can open your position with a very, very small account size. Just compare that to trading plain vanilla options on futures, for example, or trading outright futures. Way larger account size is needed. Same thing is true even more if you're looking, for example, into trading stocks. You can get started here at Nadex and still apply proper risk management with a very, very sensible and manageable account size. Trade with strictly defined risk, we covered that already. Low collateral required to trade, take highly leveraged positions if it suits your risk profile, and you have multiple daily trading opportunities, different expiry cycles, you have different opportunities to enter transactions. And also to close transactions, it's important to understand those contracts are not fire and forget. Those contracts can be actively managed. It's just like trading any other instrument. You open a position, and when the market prices move in your direction, you can scale out of that position. You can close that position. You can apply stop losses. You can do pretty much everything that you can do with any other trading instrument. So you're not limited in any way just because you're trading binaries or spreads in our example here. So let's have a look at what the markets are doing and scan through those markets. And just a quick reminder, guys, if you do happen to have any questions, that's what we're here for. I want to answer your questions. I want to help you guys to become the best trader that you can become. So please don't be shy and ask me those questions. We're looking here at euro against the US dollar. What is it that I see on my chart? I'm always looking at my moving averages first, because those moving averages, which happen to be a 10, a 20, a 50, and a 200 period moving average, they give me a very short, or with a very short, brief glimpse at them, the idea about what the market has been doing and which state that market probably is in. And that state currently is definitely here a downtrend. We can see that the market has made lower lows and lower highs. We have now pulled back, and we're now here going for, maybe a new lower low. But one important thing to note is this pullback here, or this move lower, this pullback here, beautiful bearish candle, very close to our moving average sell zone. This is the type of setup that we're always looking for. And compare this brief pullback here, which lasted just 1, 2, 3 candles, and after that, the downtrend already picked up steam again. Compare this to the recent pullback that we saw here. Took way longer, and the pullback was also much deeper than what we saw before, and we lost a lot of momentum here. Sure enough, price went lower again, but so far we haven't made a new lower low yet. We're sitting right in this area, but just compare where RSI was trading once we made the previous low and where RSI is trading right now, and same story is true for MACD. There is currently divergence setting up here with my indicators. So I see that this market is in a downtrend, and yes, I can still see that probably there's some more potential here for lower prices, but overall a lot of momentum has been lost. While euro US dollar is trending and has good price structure and everything else, I feel that we have lost that we have lost a bit of momentum, and therefore Euro US dollar wouldn't be my primary choice for picking a market. Let's just move on to the next one, briefly scanning through those markets. Here we're looking at the Aussie, Australian dollar against the US dollar. What is it that we're seeing here? And by the way, I'm always running those scans here on the daily chart. I want to get the big picture. I want to understand what the market is doing here. Market has been going sideways here. Yes, overall it's sideways. Micro view, yes, it has been an uptrend. Higher high, higher low, higher high, higher low, higher high. And now we've broken below the previous low. We're making new lower lows. The moving averages have started to fan again here for some bearish momentum. Overall, I feel that this market here is probably scheduled to go lower. That's the big picture. Currently, we have traveled too far away from the moving average sell zone, and we are likely overextended here. So one idea could be, yes, the trend is down. However, on lower time frames, if we are overextended, and this overextension might be fixable, and also let's put in some levels here, just an idea, and you guys can see that this level here probably is rather interesting. Precise touch here, several, at least the closing and open prices here. Several times the level acted or price reacted to this level here. This could be a potential pullback area. So I just take my pen and I write down, all right, I want to have a look at Aussie against the US dollar on the lower time frames. Why? Because here on this downtrend, the major downtrend, I'm probably, that's not tradable now. We're overextended. But we might start to see a pullback here towards this area. Let's move on to the next. Euro against the British pound. Guys, I can hope you can see that this is here completely really a sideways market. There is nothing going on whatsoever. This doesn't have to be a bad thing. I'm looking for trend following opportunities. I think that if something is in motion, it tends to stay in motion, and this is why I like those trending markets. If the market has been going down for some time, I think it will continue to go down. That's the big picture. Here, Euro, British pound, nothing at all. Yes, I could start to do now some really micro analysis. This low is a lower low than that, and that lower high, and that's a lower low, and this is also. But guys, just look at the big picture. This one is just, I have no clue what's coming next here. And this is good enough for me to say, I'm not interested in this market at all. Yes, we might see a retest here. If you're looking into strategies with oscillators for range-bound markets, I'm pretty sure you get really excited about those types of charts. That's perfectly fine. I definitely do not want to discredit range-bound strategies or oscillator-based strategies. It's just not my style of trading, and for that reason, I move on to the next market. Euro against the Japanese yen. Overall picture, and you see just how the market came beautifully back to test those levels here, and now maybe going lower, but also see how deep that pullback was in this downtrend, how deep the pullback was. The 10-period moving average already had closed down again. The sell zone pretty much was no longer existing here. And overall, I see not really that strong of a trend that suggests that this market here is giving me currently the cleanest, most structured opportunity here for a potential trading opportunity or setup. Let's have a look at British pound against the US dollar. First thing to note here is look at the structure of those moving averages. Very nice. Yes, we have also pulled back here. However, we didn't really close down, and actually compare it to what we saw with Euro against the US dollar. Here, price actually already made a new lower low. Yes, we still see some kind of divergence setting up here. However, a little bit more of momentum. So this is currently one of the more healthier markets, healthier trends that I can see here right now. Next thing to have a look at is US dollar CAD. So let's also write down, let's have a look at GBP USD. Just scanning through all the markets now rather quickly, and then go back and have a look at those and try to understand and get a better picture there. So what are we seeing here with with the loonie, US dollar against the Canadian dollar? Obviously, this is an uptrend. We have broken out of this range. Is it possible to identify some kind of level sitting here? Yeah, that one could work as a level, so let's put that in here. Here, price reacted to it, several reactions here. So that's the level. Price is currently moving higher. We're definitely in an uptrend. We're making new higher highs. And what's the logical thing to happen next? We probably will see a pullback here towards the moving average buy zone. However, is this tradable right now? Is this giving me the best environment? Not quite. The previous candle, we got the breakout here with a large candle. Next candle was a large candle, very bullish candle, a lot of buying and no looking back. Next thing to note here is this candle was a rather indecisive candle, maybe already borderlining to a bearish candle. Yes, it's a green candle. However, the upper shadow is pretty large, and the upper shadow is also larger than the lower shadow, which means buyers or the market rejected those higher prices at that moment, and sellers were able to drive prices lower again towards those levels here. So overall, that candle structure is pretty neutral, maybe with a tad bearish bias for me. Today's candle, bullish candle again, strong candle, looking good so far. Do I think that the pullback is now imminent? No, I don't think so, because usually you tend to get something like this here. You see those large candles, then the candles suddenly become smaller. And then you suddenly start to see indecisive candles, smaller candles. The structure of this candle here, I hope you guys can see that well, it's pretty much the same structure that we saw here. Next candle, pretty much the same structure again, inside candle, and then we got the pullback. So unless I start to see those smaller candles coming in, the candles becoming more indecisive, I wouldn't speculate yet on a kind of pullback. If this pullback occurs, I think this pullback might take us back here to test this level. The market has reacted to this level now for a few times, and we can check if the probabilities are there, and a retest of this level is likely, by also adding some Fibonacci retracements. And I'm just putting in those Fib retracements now, and you see that currently this level lies in the 50%, 61.8% retracement zone. And that's always some kind of sweet spot for a potential pullback. If the pullback is just going to 38.2, that's a little bit too shallow. If it's going beyond 61.8, that's a little bit too deep, but this 50, 61.8, that sounds interesting, that sounds good. Another thing that we could do is just try to find those levels here from other areas. And you see that from that swing point low, we get a cluster of the 38.2% Fib retracement with the 50. So once again, this area is rather interesting here, 50 very close to 61.8. And what we could also try to do is to shoot from this one to there. And there you can see that the 38.2% of that swing point low clusters also with the 61.8. So pullback in this area here between the 50 and 61.8 is rather likely, at least in my book. Do I know that it's going to happen? Absolutely not. Guys, I don't have a crystal ball. It's just about stacking probabilities. We are always looking to find multiple reasons to build a case. And I think we have identified some reasons here. In the end, you must own that trade. You must understand why you want to put on that trade. And yeah, it's your money. Never, ever just randomly put on a trade because some guy on the internet told you that he likes a certain chart, that he likes a certain setup. Start to think, start to trade for your own. You must own those trades, guys. And that's the reason why you're here. You want to see and understand the way, what I'm seeing here, and maybe you completely disagree, but that's perfectly fine because then you do have a reason why you disagree. You can make an argument, you can build a case and say that you want to go for other types of setups instead, which is perfectly fine. All right, so US dollar, Canadian dollar, good move, something to keep on the radar, but not really that tradable for me right now. Let's move on to the Aussie against the Japanese yen. Once again, what's going on here? Yeah, not really anything. Sideways move, market has been moving sideways we might have seen some kind of level setting up here. Let's put in that level. Could have been around this area here. And was this a kind of tradable setup here with a break to the downside? No, I don't like it, because what I want to see is that price action is making small candles and compressing heavily and with lots of pressure against this level, and just see what's going on here. Before going for this low, price actually made a new higher high here. So overall, price is way too much all over the place. Not much compression going on. I don't like that chart at all. US dollar against the Japanese yen. Yes, this was the beginning of a new uptrend here. Looked good. Deep pullback with a lower low. Now price is trying to slowly move higher. Again, just compare the speed of prices rising and the speed of prices falling. I feel that it takes forever for price here to just move on a few ticks, a few pips, and then suddenly everything falls apart, and falls apart rather quickly. So US dollar, Japanese yen, not something that is too appealing to me right now. Also note how the moving average is closed down here again. I want to see this kind of price action. I want to see this kind of structure. And I don't care if it's a down move or if it's an up move. I just want to see this clear-cut price action. I don't see it here. It's very, very weak and nothing really happening there. Let's have a look at British pound against the Japanese yen. Technically, yes, it's a downtrend. We lost a lot of momentum with this deep pullback. The moving averages have closed down. A lot of lost momentum. I don't really care so much about this market. US dollar, Swiss franc, beautiful up move. We never got really a pullback here with a buying opportunity, and now the pullback has gone way too deep. This might look here for potential, just for the sake of demonstration, guys. If the pullback is too deep here on the daily chart, why not have a look here at the weekly chart? And on the weekly chart, you will see that this pullback took us really just very briefly here into my moving average buy zone. And this was the structure of a bullish candle, a little bit too large for my taste, but overall on the weekly chart, that would have been a potential buying opportunity sitting here right there. Was it a good forcing and strong buying opportunity? What has this market been doing here forever? Moving sideways. Any questions, guys, on how I have analyzed those markets now on the daily chart and with the US dollar, Swiss franc also on the weekly chart? Is it clear what I'm looking for? Do you have any questions here? Just giving you guys a moment to type. And in between, let's have a look at those other markets again. Aussie against the US dollar. And we said, I like this move to the downside. I think we might start to see some kind of pullback here. Why not have a look here and search on the lower time frames? And you guys can see that on the 4-hour chart, this move looks much more pronounced, much clearer here. And the pullbacks never really took us so good, so deep here back into the moving average sell zone. If I'm not getting those pullbacks, if those are not deep enough, what is it that I can do? I can drop down with my time frames. If I'm looking at a 2-hour chart, you guys can see that now in a 2-hour chart, those pullbacks are deep enough. So prices are not pulling back deep enough. Go down with your time frames. The pullbacks are too deep. Go higher with your time frames. You can play around with those and pick those time frames that work best for you. Also very fascinating here. Once price is broken below this level, you see price stood here, came back to test this level from the downside. That's a very, very common pattern here. And guys, just another one. You see that price had a hard time to break out here. We got the breakout to the downside. Price is coming back. We're getting a small bearish candle sitting here right in the sell zone just below this level. That on its own here would have been a very, very beautiful trade. Pretty much picture perfect. James is asking, and thank you very much for that question, James. Do you use the RSI with your decision making? Yes, I do use the RSI and MACD, and I use them in the same way. I'm not looking for overbought or oversold readings. I'm just trying to check my indicator convergence and divergence. And actually, that's the only little issue that I have with this pullback here, the previous low that we got was this low here, and the low before that was there, and there we have this ever so slight divergence in MACD and also here in RSI. Not pronounced enough to keep me out of that trade. On the day, on the time frame that I want to take and trade, this is a bonus factor. On the next higher time frame, it would be more interesting to see what's going on there. But really, RSI and MACD is always just checking for convergence as a support. As an idea, yes, we got still good momentum and I want to take that trade. Or if I do get divergence, I'm getting really curious and analyze those markets and those charts a little bit deeper. So Aussie against the US dollar, 2-hour chart. Let's drop it down to a 1-hour chart here. And you see on the 1-hour chart, I might be getting already here a small bearish candle setting up. So why not jump over here to, let's try to make all this so that you can see the chart and also the Nadex platform here. So I think this market might be going lower. I never know for sure, but I think that I've gathered some evidence that this might be the case. I could be completely wrong. And to protect myself against being completely wrong is that I would go for proper risk management. Let me show you guys that in a moment. We are looking at Aussie against the US dollar here. So let's open this one up, and I'm looking at the daily expiry cycle. Now, I want to open a potential short position here maybe. So the idea is, if I want to have a short position, fast recap from last week, what is it that I want to do? I want to enter as close to the ceiling level as possible. So currently we're trading at 73,810. So I'm looking here for something where the ceiling is close to 73,810. We might be going for this contract here with 74.20. Guys, 74.20 here is quite a bit up here. The perfect contract would be one which is sitting just here at maybe, 70.40, something like that. From all those contracts I have here, that's the one which is closest here. So I might be interested in potentially maybe trading that one. Why do I want to enter as close as possible to the ceiling? Because if price goes higher, the price of this contract will only appreciate until the ceiling level. So my losses are being kept there. So if I want to trade this contract here now, I could be selling one contract, and my maximum loss is 40 bucks. Why is it just 40 bucks? Because I'm entering very, very close to the ceiling level. I'm entering here. Sorry, 74.20. The ceiling level is here. This is just those 40 more pips that the market could be going higher here in order to give me that. Sorry guys, was wrong. Forget about the pips. That's just the distance here, and I want to keep this distance as close as possible. Selling this contract, just 40 bucks risk. My maximum profit, however, is $210. I get this money only in this amount if price actually starts to drop all the way to the ceiling level, 71.70. Do I think that this is likely? No, I don't think that this is likely within the next 2 hours and 31 minutes. But from those contracts available here for trading, this contract here gives me currently the best sweet spot available for entering a potential short position here, because I'm as close as possible to the ceiling, and there's enough space to go to the downside. Now, my demo account has a value of roughly $24,000. I want to risk with my trading about 1% of my account on any one given trade. So here I'm happy to risk $240. And this is why risk management is so easy here at Nadex. I know no matter what happens, even if Earth freezes still and the sun doesn't rise tomorrow, my maximum loss is $40 on that trade. So what I have to do now, or what I can do now, is I can just click those numbers up and see, all right, if I was to trade 6 contracts, my maximum loss would be $240, 1% of my account. So if I place that order now, and again, it's just for demonstrational purposes, that position is on. And no matter what happens, the worst thing that can happen to me is I can lose $240, 1% of my account. And I can easily manage that trade now. I can say I want to close that position early on. I can now buy some contracts to offset that position. I can put in an order with a limit order to buy those contracts. I can do everything around that contract. So the idea was enter as close as possible here to the ceiling level for a short position. The other ceiling levels would have been way more farther away, and would have had way more risk here. So for example, let's just think that I could have been interested in selling this contract here. You see, if I sold that contract instead, my maximum loss per contract would have been 166 for the potential of a maximum profit of just 84. I always try to get a contract where I can make more than I'm risking. Trading for me works from two perspectives, two contributions. Contribution number one, I would like to have potentially more winning trades on my hands than losing trades. Human nature, everybody likes to win. I would like to have more potential profitable trades. Next thing, I want those trades also to be larger, which means that if I lose money on a trade, that's okay, because I know with the next potentially profitable trade, I should be able to make all that back and even then some more. Reward to risk ratio should always be in your favor, should always be larger than 1, at least for me and with my style of trading. Jack is asking, James, thank you very much first for the feedback there. You're welcome. And Jack is asking, how would you buy some contracts to offset? No problem. Let's have a look at that. Thanks for the question. This is my contract here. I'm just clicking on that contract with the open position, and now I can buy back this contract, and I can say, all right, I want to buy back 3 contracts, but I don't want to buy back those three contracts right now at 73.80. I could say I don't want to pay more than, let's assume price is shooting here for a pullback. Yeah, why not say I'm looking here for 73.50. This should be round about here and this area. And if price is about to go and check for new lower lows, it definitely should be able to come back and test this level. So I can now just put in this order, buy. It's a limit good till cancel order, and I'm just putting on 3 contracts here and with that price, and I'm just placing the order now. And you see my order is now sitting here. It's a working order, and the very moment somebody is hitting my order and is taking the other part of that trade, that order will fill. Usually I want to place all my orders and manage that position the very moment I put that position on. I don't like to keep on watching my trades, my position. It's always this, I'm very prone to fall into that hoping and praying mode, and maybe just like horse racing. I never actually bet on horses, but I think it could be the same thing. You're just sitting there and pressing your thumbs and go, go, go. No, this is trading. This is the business. I want to manage all that stuff, and I don't want to have any emotions. And for that reason, perfectly fine to close out of that position. Here, at least scaling out. Maybe put in even a deeper take profit order also for the remaining 3 parts. But Jack, this is how you would offset that position. And if you had entered a price where the market is trading right now, you would just have seen a remaining position here of -3 contracts. Easy as that. Jack, any questions on that one? And while I've shown you that, let's also have a very brief look here again at our GBP USD. And let's have a look here also. And GBP USD, here we are on the daily. So the main idea here is that we wanted to see and potentially enter that. Just a second, guys. All right. That we wanted to enter this market, and the question is also again here, with which contract do we think we might be looking at? Let's just briefly look again at the daily chart here. What is it that we're looking for? This market is currently going lower, so we're looking here for potential short trading opportunity just to balance things a little bit. We're trading at 131,675, and yeah, where do we want to enter? We want to enter as close as possible to the ceiling. Which of those contracts allows us to do that? It's just this contract here where the ceiling is 132.50. Round about here, not perfect, but very close. Those other ones, way higher, way higher, way higher. So if I want to trade this market to the short side, that would be the contract which I currently would pick. Looking into selling that market. Now, compare it to what we just saw with Aussie and the US dollar. Here, I'm not so close to my ceiling as before, which means my maximum loss on that trade is $86. My maximum profit is just 164. That's still a 2-to-1 reward to risk ratio, potentially if all the stars align. Compare that to the 40 to 210 for Aussie against the US dollar. So just from a reward to risk ratio, I much more prefer the trade that we just put on here before. Once again, stressing, it's just for educational purpose, not a recommendation here. Kirby's asking, thanks for that question. Have you ever not entered a trade if the price spread is too big, too wide? I always have a directional idea about what the market might be doing, where the market might be going. And for that reason, I'm not really so concerned about I'm not trying to scalp that market. I'm not trying to be in and out of that market within seconds. I have a directional bias, which means I don't care really so much how much I pay for this contract right now, but rather, don't get me wrong, I still want to make sure that I get a good and fair price for it. I don't have to pay, or just have to pay a good and fair price for it. But it's not that the spread in itself would turn me away. The point is, I know where this market might be going and what this contract might be worth then. And then it should be good. At least that's my take on it, and way more applicable here and better to explain and illustrate with binaries than with spreads here. But overall, that's the picture. Roniel is asking, do you find it advisable to protect your order with a different order with different floor and ceiling? One kind of trade that you can do, for example, is around news events. That's a very, very nice strategy that you can implement here. Let's just, for the sake of completeness, think that this market here has some news. And let me just zoom in a little bit here. Let's just assume we're getting news here. And we do happen to have a trade, a contract available where this price level here is the ceiling. And this price level here is the floor. And you have another contract where the same price level is actually the floor. And this price level here might be the ceiling. That's almost the perfect trade because, once again, that's just my take on it. You're entering very close to the ceiling here. You're entering very close to the floor on the other contract. And due to news, you find that it's rather likely that we will see volatility, that the market will start to move. And that would be something where you think, okay, I don't care if the market is moving that direction or that direction. I'm risk capped here on that trade. I'm risk capped on the other trade, and I don't care in which direction the market goes. Either way, as long as the market moves, I have a decent probability of making money. That's trade and scenario where this protection of an order with a different order with different floor and ceiling makes perfect sense to me. Another case might be where you say, all right, I think this market might be going lower. I'm going for this floor level. Oh, let's go 32.50, was it, something like this? That's my ceiling level, and my floor level might be here. And you think, maybe a little bit too aggressive, or I want to be more aggressive. So I'm going also for one contract which just has the ceiling level here and the floor level here. You can do this, you can manage and mix and match between those different contracts. Just one thing to make sure is, guys, you want to have the absolute risk exposure right. So I want to risk 1% of my account on the position on British pound US dollar here. I don't want 1% on this contract and 1% on that contract. No. The sum of both of those should be 1% of my account. Otherwise, you're just stacking risk, and your trading start to trade way too large. Roy is asking about that session being recorded. Yes, it is recorded, and all your attendees should receive that recording. Give us a little bit of time for processing and so on, but you should be able to get that recording within the next day or two. Roy, thank you very much for that question. All right, guys, time is already pretty much up. So my question to you is, any more questions here? A, on the analysis part, B, on picking the contracts to trade those markets which looked most interesting at that point in time. And another important takeaway for me would be to get this this stalking mode, this US dollar, Canadian dollar. Yes, it's interesting. Yes, there might be something happening. It's just not there yet. We should just lay low. We should bide our time, wait for the opportunity, and once the setup is there, we should be right in there, guns blazing, and taking our positions. But it's just not there yet. So we want to stock markets like those. That's also a very important takeaway, at least for me. All right, guys. Kirby, thank you very much for the feedback. Really appreciate it. Yeah, then let's just quickly and briefly jump back here to the last slide. Guys, demo accounts are available. Those demo accounts are definitely no longer limited in time. So by all means, please have a look around, sign up for that demo, become a member of Nadex, of the exchange. You've seen how easy it is. Play around with the demo account, get a feeling for opening and managing those positions, scaling in, scaling out of those positions, how easy it is to implement that. Apply proper risk management there, and once you think you have got the technicalities down and see how everything works, then try to trade with real money. Please start small, take it up from there, learn. Trading psychology, very important part. Demo accounts can't prepare you for that. For that reason, you will still want to stay small there, but by all means, give it a shot. Carlos is asking a good question. Ludmila, thanks a million for that feedback. Really appreciate it. That's why I'm doing those sessions, Ludmila. Thank you very much for that. Carlos is asking about the entry cost. Do you get the entry cost back when you are right? Let me just very briefly jump back here to the platform and show you guys that. The idea here is you're paying a price where the market is trading right now. So if the market goes out and closes trading, this contract expires at the very same point in time, same price point where you are right now, you will get your money back because that's the worth of the contract. This is not a zero or all payback structure. This is the payback of where is the price trading right now. So it's not some kind of definitely not comparable with binaries here, and that's also the reason why we have to keep in mind that if we want to enter that position here, the maximum profit is definitely only paid out if price in this short example here is trading at the floor level. If price is trading where it is right now, you didn't make money, you pretty much didn't lose any money. If the market is going a little bit in your direction, you will get a little bit of money. If the market is going a little bit against you, you will lose a little bit of money, but not all those 86. It's really the major part here. And just to keep in mind, guys, we're just talking about the base price here. Fees obviously are on top. You will always have to pay those fees, but this is really just a P&L and end-to-end perspective. Roniel, guys, I really appreciate those questions. Thank you very much. Roniel is asking, do you find it advisable to protect your order with a different order with different commodity? I like to see that my trades make sense on the chart that I intend to trade. So I don't want to take a trade in silver just because I have another trade in gold. Actually, due to correlation, it's rather likely that gold and silver will give me trades in the same direction. Now, does it make sense to risk 1% on silver and 1% of gold? I would be a bit reluctant there. I would scale down, maybe risking 0.5% on gold, 0.5% on silver, or just taking that setup that I like best. Just taking trades in other positions due to correlation and portfolio aspects. I do that from time to time, but definitely not that frequently. And I don't think that this is, you should be pretty advanced and perfectly understand what you see on those charts and what you're doing before you move there. I think this adds just too much complexity at that point in time for the little reward that could be had there. All right, guys, let me just scroll up here. But yeah, once again, that's a wrap. Thank you very much for tuning in. Looking already forward to my next session with you guys. I hope you liked today's session. You learned something new. Any feedback, as always, is appreciated. And yeah, guys, looking forward to the next session. Happy trading. Take care. Thanks again. Catch you next time. Bye-bye.